Right. Welcome to another class. In this class, I'll be talking about indicators and the kind of indicators I use. Well, I use indicators, of course, but my chart when I post result on my winning trades on my phone, usually you don't see an indicator. Excuse me. Yeah. Okay. Sorry. Usually I don't post indicators on my phone for you to see, but the analysis is usually done on the laptop. And on my laptop, as you can see, since you have been seeing my laptop, there are a lot of indicators. Not a lot, actually, just two indicators that I used to give me extra confluence. Okay, so number one indicator I use, and you should be using, not to overcomplicate yourself. A lot of people use different kind of indicator and it works for them. Okay, you must not be like that, and you must not be like me. So choose your life. You want it simple, you can keep it simple. You want it difficult, you can keep it difficult. Okay, so it's all about what you want. It's just simply all about preference. So but the way I do it, number one, support and resistance levels plus swap. Let's go to the chart. I've already done this before, but I just want to tell you that those are the indicators I use. All these things you see are levels. This sweet spot you see, they are all levels. They are all levels. Support and resistance levels plus swap. You remember how to do swap? When resistance becomes support and support becomes resistance, those are swap levels. Okay, that's the kind of, those are indicators I use. Now this is a level. This is a level in the market, right? This level of 2600 is a level in the market. Price has used it before. Here, price broke it, broke this level, broke it down again and came back to it. In this case, this is a support and a resistance level. In this case, what do we have? It is now, this was formerly a support. Price rejected from this price, this place, price went up, okay, rejected and came back to this place and then pushed back up, came back, broke that level, support became resistance and pulled back. So this area is an area of support turned resistance. This is another level in the market. Well, this one is not a good one. Yeah, this is another level in the market. This is a support. If you look at it from behind, let's look for another one. Let's look for something that is clear. Area of support turned resistance. Look at this level. This one, 3400. This 3400 was formerly a support. Price went up, came, broke that support, went back up. So these are levels. You need to be working with levels. Okay, these are the indicators I use. Okay, sweet spot that gives me major levels in the market, and that is what you should also be doing. All right, price went up, broke the level, came down into that level and rejected. Okay, but it went into other levels though, but I'm just looking at the main levels just for you to understand. Support and resistance level plus the swap, let's look at another one. This one too is a level. You see, this is 9000 level. Price came to the level, rejected, broke the level, came back to the level and pushed back up. So this is a swap. This is support and resistance level plus swap. Okay, from this level to that level, this level to that level. How many pips did we get from here? Just 25 or okay, 50 pips. 50 pips is okay. 50 pips. It eventually went to the next 100 pips though, but with a lot of problems here. It was an uptrend, but it was jagged. It was jagged. Now look at another level here. This is a support and resistance level. Okay, support, turned resistance. This is a level. Price broke the level, came back to it again and rejected. So that is one indicator I use. Number 2 is moving average, especially the 21-day and the 50-day moving average. I like 21-day moving average because it's closer to price. It's usually hog price and it gives me quick turn in the market. The 50 is a little bit wider, but they are both EMAs. Okay, the 50 is a little bit wider for much more conservative entry. Most time I don't usually follow the EMA per se, or other confluences can happen even if the EMA doesn't happen, but where there is confluence between level and EMA is more powerful. Okay, look at this. This is 110,500. This is a 500 level. So your next take profit will be what? 109,500. This is 110,500. Next take profit 109,500. And look at the rejection here at this point and the EMA. Okay, so price just taps the EMA, taps the level. This one is a very high probability trade. Once you see this one, nothing will hold you from not entering. You just enter. Price taps it and just drops. I mean, you keep winning all the time. You just win. You just win. Okay, you just win. I'm not saying there will be no mistake. You are going to have mistakes, but your mistakes will be small, especially when the market condition is very favorable. Look at this one. Price taps the sweet spot 10400. The EMA confirmation 10400. So what is the next take profit? 10300. It's very simple. Okay, look at this one. Price taps this level 10500. The EMA support. What's our next take profit? 10400. It's as simple as that. Simple, clean and clear. You understand that now? Okay. Now the next one is the channel surfer acting as a trend line. So the outer and the midpoint are very important. I like the channel surfer so much for extra confluence. If you want, I can send it across to you. The channel surfer is good. Look at this place. Now this is the outer channel. This is the outer channel. This one is the outer channel. So then this red line in between is the midpoint, the mid channel. All of them are acting as support and resistance and as trend line for you. They're already there. I don't need to be drawing. I can draw trend line, but this one is already drawing it for me. So I also draw, okay, when I want to draw. All you just have to do is, as price bounce on the channel, you just take a sell or buy. Look at here. But again, the confluence must be with your levels. If at the place the channel is bouncing at the outer part of the channel, it is in confluence with its support and resistance level, that is a good trade to trade. And also if the trend is down or up. All right, if the trend is down or up, like look at this one, it's at a level 750 level, so we are going to take profit at the next 750 level. So if this is 39,750, this one will be 38,750. That is 100 pip. It's in confluence, number one, with level, with the outer channel, right? So moving average is not here, but we have levels and we have the outer channel. So we already know there is a downtrend. We just take our profit here. Price can also reject the middle level. Now this middle level is now in confluence with our moving average 21-day. So we have a level here of 38,750. Where are we going to take profit? Okay, price didn't get it. 37,750. Price didn't come there, but surely price is coming here. But currently price is rejecting this place 38 that So when price goes back up to from 38, price will move back to 39. If price move back to 39, then back to this area. All right. So look at this one. Price is rejecting what? 129,250. Now we don't know the trend yet. So 129,250 is supposed to take us to 130,250, but price didn't go there because the trend is not yet defined. If the trend was defined, you will see that it will go there exactly, take your profit and reject from there. Okay, supply and demand zone and the swap. I think I've already stressed this one a lot. So those are the indicators I use. This is a drop, this is a base, this is a rally. If you just mark it, okay, you'll see that it was in confluence with this area. 132,750, drop, base, rally. So price enters into this supply demand zone. Okay, this is a swap, this is a drop, base, rally, but a swap. So price had to come back there and then reject from 750. That is 132,750. So we should be having 131,750. Price hit it beautifully. Okay, so it's very simple. So those are the indicators I use. So I'll just repeat again like a refresher: support and resistance levels plus the swap. Just go and read your material or watch those videos again. Everything I have already stated clear there. Moving average, you can use 21 or 50, but I normally use this 21 more. The channel suffer, which is acting as trend line, that is the outer and the midpoint. Then the supply and the demand zone plus the swap. Okay, those are the major indicators I use. So the major indicators I use for my analysis. Okay, all these levels, as you see them, they are marked on my phone. Okay, I just copy them and I mark it on my phone. As price is bouncing there, I just use normal trend line and my moving average is there. I can see it. All right, so it's very easy to understand. All you just have to do now, guys, is go through the materials. Like I keep saying, if you don't understand anything, just ask me questions, send me a message, send me an email, give me a call. I don't understand this, and you'll be put through, and it will be taken care of. I'll put you through. All right, with that being said, thank you very much for watching, and I know you like the video. All right, so the key to understanding this more is practice. Don't just watch video and just go and sit down. Practice on demo, practice for maybe 2 weeks. Then after that, just fund a small live account like $10 and just test your abilities. Okay, learn to hold trade and hold it. All right, enter the trade, hold the trade and win. Always fund what you can lose and keep practicing. $10 until you can take it to $1,000. So thank you very much for watching. I wish you all the best.